Hello and welcome to Trading with Technical Indicators. My name is James Boyd. Happy Monday to you. Behind me it's bright and sunny here in Salt Lake City. Man, it was hot yesterday. pretty amazing. Hopefully that weather's coming your way. So we'd like to also welcome Rachel Dashel. She is in the chat. Many of you know Rachel. Say hello, Rachel. Also, we have many of you here today. Some of you might be brand new. We welcome you. This is not a one-off session. This is a weekly session. I'll share with you the link. A couple links that you're going to want to have ahead of time and kind of be aware of some other events we have throughout the week as well. We also like to welcome Willis, Tatiana, Will, NVO, Grace that we're in. Maybe like a cover call or a caller, etc. So those are going to be some of the things that we'll talk about here today is what is the purpose of it and how do we use it. Now, just real quick as we're getting going here today, remember you could also follow me on X. There's my handle. At James Boyd CS. I do post educational content there daily, so does Rachel, so check us out. Also, quick reminder with what we discuss, the information here is provided for informational purposes only, should not be considered an individualized recommendation. Also, if we talk about, let's say, options, we'll talk about stocks as well. Remember that options carry a high level of risk, not suitable for all investors. When we also talk about, let's say, the examples that we will do, by the way, if you're joining us, we have 2 paper money accounts. We practice trading in those accounts. Feel free to join us in the paper money and follow along. That way you can actually see how they turn out over time. And also remember that that is done for educational purposes to learn. And also remember that investing involves risk. Now, today we're going to talk about kind of gauges first. When we talk about gauges, we're talking about indexes and sectors. From there, what we want to really assess is where is those trends going and where are we likely going to be using the technical indicators. So first off, let me kind of just go into this. Now, some of you might not be aware. I want to kind of just show this first off. So what I'm showing here, this is the Thinkorswim platform. Okay, this is the software-based version. Yours might not look exactly like mine. Don't worry about it. I've kind of worked on it over time. I'll share with you some of those tools that you could actually get for yourself. For just a moment, let's just kind of set our eyes straight, set the table here. We just got indexes on the left-hand side, nothing new there. Sectors, Dow Jones, and the NASDAQ 100. If we scroll down on the left-hand side, you're going to see that the S&P 100 list there, and you're going to see the S&P 500. That's how we like to have our set there. Now, the one thing that I did not make mention of, because we're not going to discuss it, we got that F word right there. We won't open that up, but some of you like to look at gold, silver, crude oil, and things like that, but that is the list above. So make sure you set that up on the left-hand side. It's the easiest way to do that, okay? That way you just kind of always have a familiar process and a routine that you go through. Let's take a look at, first off, the indexes. Now, if someone were to ask you a question, hey, which of the indexes have been the strongest? What would you say? Well, if we pull this up, let's just take a quick look at this before we look at the chart. We had this really ranked. We ranked it by the last. So in other words, whatever index is the highest, it's at the top. So if we were to look at, let's say, the NDX, the SOX, the SPX, if we look at the first 2 rows, what you're now going to notice is the SOX for the year, this is year to date, okay? 45% on the semiconductor. That's the index, okay? When you take a look at also the NASDAQ, year to date, 24%. And when you take a look at, let's say, the relative strength, the RS, relative strength for those, now remember, this is the performance of the NASDAQ compared to the S&P 500, the top row is. The second row, we're looking at semiconductors, the SOX. And if you look at that, we're looking at the SOX performance compared to relative strength compared to the S&P 500. Both of those 2 are still the strongest. So if someone asked me that question and say, what index is the strongest? We would say the NASDAQ. What's inside the NASDAQ? Of course, some semiconductors. Now, if we look at, let's say, the S&P compared to itself, there it is on the 3rd row. But the Dow Jones, what you're now going to notice is it's underperforming, hence the red. Now, when you look at relative performance, the reason why there's different durations, well, because you can have different durations of relative strength in terms of stronger, longer term, but maybe shorter term, stronger, okay? Or vice versa, weak in the short term, but strong in the long term. Could look at it both ways. The Russell, which is not to be found, you're going to see the Russell is right above that, and really it's in the red. So smaller caps underperforming the SP, the SPX, SP 500, and it's also underperforming the NASDAQ. Now, first off, any questions there? Now, here's the deal. What's the purpose of, again, the technical indicators? Number one is we want to assess the trends and momentum. So when we look at this chart, what we like to do is we like to really look at the trend. And I'm going to share with you, for example, just real quick, the chart. Let's go to NASDAQ first. And let me share with you this chart. So if you're joining us for the first time, you say, I don't have this chart. It would really hurt my feelings if you did not accept my gift as we roll into Thanksgiving and Christmas. Now, this link that I sent to you, which I will also post in the description. If you're watching this on the recording, you can go up to the very tippy top, go to setup at the very top right, go to open shared item, and all you're going to do is just copy and paste in what I sent in the chat. I will paste that again. I'm going to copy and paste it myself and say preview, okay? Now, if I did that and I say preview and then import, okay, you get a little mini chart that comes up and there it is, okay? So let me send that again. Now, let me know if you have any questions on that. Simple, very top right, setup, open shared item, not too bad, right? And then here's the link. It's just like someone sending you a website, okay? And all it's doing is it's just sharing my chart with you so you can just save it on yours. If I say, okay, I paste it in, now what? Preview, and then import it into your platform. There it is. And you're going to get that little chart that comes up. Now this chart right here, if you said, how do I save it? Simple, go to style and just say save style. Okay, now the moving averages that we're looking at here, these are whole moving averages. Now let's go to just real quick the NASDAQ. Let's look at a couple charts. And by the way, let me know a couple charts that you're looking at. Don't hog them all for yourself. That would be mean. Now, if we look at this chart, what you're now going to notice is the shorter term moving average that's closer to the current price, okay, is the 10-period moving average. The one that lags a little bit is the 20-period moving average. The whole moving averages, they're weighted, so they're going to be closer to the current price. Now, if we look at, let's say, the NASDAQ, what you're now going to notice is a little push up in the price, right? A little flag back, not much of a pullback, and the pullback has been sitting on the rising 20-period moving average. So remember, just what, 4 days ago, we made a high. And if we make a high, there's a really good chance that we could make a a higher low. And that higher low might be right at the 20-period moving average. Now remember, if you make a high and you make a higher low, that is what we call an uptrend, okay? So there are some stocks. Now, by the way, if you were to, let's imagine I've been on a vacation. I haven't been. I don't take vacation. I don't need vacation, okay? If I'm on vacation, I'm still working. So here's the deal. My wife hates it. But the biggest deal is if we said, what are some stocks in the NASDAQ that are causing the NASDAQ index to move to the upside, what would you say? Okay. Now, when we look at the SOX for just a moment, when I pull up the SOX, it looks very much like the NASDAQ. So not a whole lot of difference. Now, what are we trying to find? We're trying to find where there is relative strength and where there could be, if the investor was looking for those, bullish setups. Now, when we pull up, let's say the Russell, that Russell chart does not look like the NASDAQ. Now, is it massively going down? It's not massively going down. It's just kind of a little bit more sideways. The RUT, R-U-T, Russell 2000, there it is, okay? The one we haven't pulled up yet, second to last, we see Dow Jones. Now, Dow Jones looks a little different. How so? Well, it's below the moving averages. Now, remember, if you're below the moving averages, and especially if the 10-period moving average is not green, alarm going off, okay? If that 10-period moving average goes from green to red, we're losing momentum, altitude, okay? And all of a sudden now we're dropping down. Now, if the 20-period moving average to go red, now we're chewing into the trend. We're losing some of that trend. Now, why does someone even want to do this? They're trying to grow their capital at a higher rate than just getting 3 to 4% currently, maybe, in some fixed income products. They're trying to get a higher rate of return, okay, to grow the capital at a higher rate than inflation, which, by the way, is kind of a big topic lately, okay? Now, the one we didn't pull up before we look at some examples is the SPX. If you look at the SPX, I would say it looks like the NASDAQ. The difference between the S&P and the NASDAQ, we do see that the S&P did not hold the 20-period moving average. The NASDAQ actually, the price stayed above the 20. The S&P trying to flag, pull back and get a bounce back to the upside, but it had to pull back deeper below the moving averages before buyers came in. Is it horrible? We wouldn't say it was horrible. It just, you didn't find buyers as high as you found on the NASDAQ. Now, what stocks? Okay, now Luke actually says NVIDIA, WDC, and Amazon. Now, my gosh. Now, let's pull this up. Now, let's imagine we're all kind of using the same platform. On the left-hand side, so the first major takeaway is the NASDAQ and the SOX. The one thing that I do want to kind of make mention before you look at any individual stocks is we would also highlight the sector of discretionaries. Now, this goes back into what Luke mentioned, okay? Now, when we talk about IXY, that is the consumer discretionary sector, okay? So if you ever, let's say, considered buying a house and you said, where in this valley, if you lived in a valley between two mountains, you say, hey, where am I gonna, for example, buy? You might pull up by zip codes, which areas have appreciated or held value. It's the same idea. Here we're just doing the stock market. We don't have zip codes, we have ticker symbols. And if you look at, let's say, the IXY, that consumer discretionary sector, which has been led by yours truly, don't be surprised, is Amazon, which had a big push on Friday, and you thought that that was it. Well, that wasn't the case, because when they announced that they had to deal with OpenAI, it gapped again, which that was pretty amazing, okay? Now, this has been a game changer for Amazon because it had been kind of stuck in a range for a while and has broken above that range. The old top of the range was probably 240-ish, and now we've broken above that, okay? So, I mean, could we be thinking 275, 300? Who knows? I mean, you just made a brand new high. Where does it go from here, okay? But what it has done is it broke that glass ceiling, and now, if anyone was bearish, if they are still, they're probably wishing they didn't know what a bearish position was. Okay, and so overall, that has been pretty surprising. Okay, now we also got to say, now Bill actually makes mention of Tesla. Now, by the way, let's kind of pull up something just real quick. So we did a trade last week on Amazon. I'm not going to go back to that, at least today, and I'll kind of show you our schedule in just a moment. But one that is made mention of by Bill, let's kind of pull this up. Let's look for our first trade example. Now, remember we said when we talk about technical indicators, we could be using moving averages, MACD, stochastics, right? RSI, CCI, all the above. They're tools to kind of help us gauge trend, momentum, and or sentiment. Now, one of the charts we're going to look for, now remember, if you look at, let's say, with that, the purpose of technical indicators, the second thing that it was trying to help us do is to create buy or sell decisions. Now, if you have not joined us before, welcome. When we talk about potential buy setups, in our examples, we're really looking for moving averages that are number one, green, okay? And we're really looking for what we call the 1, 2, 3 method. One is when the 10-period moving average goes green. Second is when the 20-period moving average goes green, more confirmation. And that third one right there is when the moving averages cross over. And if we get a 1, 2, 3, now 1 is kind of the most aggressive entry. 2 is a little bit more confirmation. 3 is more confirmation. To get more confirmation, you have to have the stock go up more to get that confirmation. Now, sometimes that stock can, for example, have a nice little run to the upside. Now, is it always going to be that case? You sure hope so. It doesn't always happen like that. But boy, when it does, as they say down in the South, and Rachel, you should know this, boy, it sure is nice. Okay, now here it is. So I'm going to go back to the 1, 2, 3 method. There's 1. There's the 2. Now notice the crossover kind of happened first, and the 20-period moving average really it turned green about a day later. So sometimes you can get the moving average to cross before the 20-period moving average goes green. Nevertheless, it's still the same. If we look at this now, you're going to see that we've had green moving averages on the chart. The 10-period moving average is above the 20. Why do we care about that? It's a simple answer. We want momentum. I'm going to tell you right now, okay, and I've said this before, and I'll say it again. I don't care. It took me a long time to realize this. If you look at the times when you've made money in the market, it's because you had momentum at your back, okay? And if you look at when you lost money, it's simple. You lost momentum. The price actually was below the 10-period moving average and probably the 20 or 30-day moving average, whichever one you had, and you just said, man, I lost or I'm down. So it is critical, if the investors are going to try to be on the right side of the stick, if you will, that the price is above the 10-period moving average. That does not guarantee that it's always going to be like that, but they're trying to have positions where the price is above the 10, thinking that it could continue to trend and have momentum. Now, let's do a stock trade for just a second. Now, there's 2 ways we could do this, okay? Number 1, we could just go to the trade tab, which, now, by the way, does this mean you have to do a trade? No, it could be a trade or investment. When we say trade, we're kind of thinking like maybe it's going to be short term. That trade, it could be an investment. We can buy and hold, whatever. So don't think if we're going to do a trade that it's shorter term. We're just going to do a trade. It could be different durations of time. It could be a stock or an option position. Now, what I'm going to do here is I'm going to go back to the paper money account. Let's go to trade for just a second. Let's go to the trade tab there. So this is probably how most people are going to set up the trade initially. I'm going to type in TSLA there. What I'm now going to do is if we wanted to buy something, you got the last price, the net change for today in dollar terms, bid and ask. All right, now this is one-click functionality, okay? So if I left click on the ask, it's just going to bring up a buy order down below. If I right click on the ask price, it's going to bring up a menu. Okay, now the menu does what? We could just buy it, we could sell it, we could buy custom, and the custom is where we're going to have like maybe the buy order itself, and maybe just like with a stop, or let's say with a bracket. The bracket would be that you're buying it, you have a stop, and you want to say if it gets up to this price or higher, sell it. The OCO stands for one cancels other, okay? Now that's what I'm going to do in this case with bracket. So how do we get that? Right click, buy custom with OCO bracket. Let's do it. Now what we're now going to do is we're going to come back to here in our examples with a $127,000 portfolio, okay? Let's say we decided, hey, I'm going to do, let's say 20 shares of stock, or let's say 15 shares of stock. Now, if I did 15, it defaults to 100. You don't have to do 100. You could just come in here and say, look, I want to do 15 shares, okay? Now, what I'm going to do in this case is I'm going to click right above, we call those the pool balls, right above that, snap. And what it does is it makes it where the sell is also 15 as well. Second row right here, this is where we think the stock, where could it go up to that you're saying, I'm making a decision. If it goes up to that price or higher, sell it. Now, we don't know if it's going to go there, but we're saying if it does, sell it. Limit is saying that price or higher on a sell order. Dated GTC, standing for good till canceled, okay? That's not that bad. Stop, you actually probably already know. The same thing here, dated GTC. Now, if you're going to do this a lot, you could set this up as just kind of a custom order. You don't need to do GTC. You could just save it up as a custom template and just make it faster. Now, what I'm going to do is if we went back to the chart for just a moment, let's start with the stop first. Okay, a lot of people like to kind of look at the downside first. Well, if we looked at the downside, where do you think the support level is? If it got at or below what price level would you say, James, this is no longer trending the way that I wanted it to go? Well, and type that number in. Where's the level? Where would you say, hey, this is not going the way that I thought? If we set the most recent higher low, it's at 440. If we said maybe where it broke out from, probably 455. If I said, hey, look, this is not this the railroad car is going off the tracks here, 423. Different people, different types of investors set different types of stops. It kind of depends upon if you want to try to allow the stock to trend, or are you trying to be a more of a shorter term type of trader. 455, it's probably your shorter term type of trader. 440, setting a stop below there, kind of more your intermediate. This actually really probably being the longer term investor, they're giving it more wiggle room. We're going to take the middle of the road here. We're going to say, look, if you go below 440, okay, 440.84, less 2%, where's the stop? That stop is going to be 432.02. We're just taking the 440, which is that middle line right there, here, less 2% of 440, and it's going to be 432.02. 432.02. Now, let me go back and put this here. Now, quick reminder on the stop, okay? Let's say we buy the stock and the price goes down to 432.02. That does not guarantee that it's going to be sold exactly at that price. It could get filled at a lower price level. So that's the risk of the stop. Stop is a market order, okay? It's a trigger to sell. The con is we don't know what it could sell at. Okay, now there's a way that you might say, James, could I change that order to the stop limit? Yeah, but we won't go there right now. Now, if I look at this, I'm going to go back to the chart and say, where's the upside now? We kind of did the position size and the downside. Where might this try to go to? Well, the only thing that we see on this chart, and this might be some investors' favorite type of setup. Now, the most overused word this year, well, two of them, is a new high, for sure. If we say new high, the most overused word by itself is continuation for 2025. Now, we don't know if it's going to go up here. But many investors, they might say, James, you know, if you actually had something like this that had this type of pattern, they might say, I see kind of old resistance, many touches right around the 440. And what I'm going to do is I'm going to draw this in two different ways. If I kind of did not go all the way down to the bottom, the target's not going to be as high. Okay? So let me kind of pull that down. If I said, hey, look, I'm only going to draw it to, let's say, here. Well, it's going to give us a target of 529. If you took it all the way down to the bottom, it's going to give us a target there that's 573. So just notice, now I don't know about you, I'm kind of like a pessimist, okay? I live close to Missouri, the show me state. I would rather have a higher probability-based target than something like way up there in the sky at 30,000 feet. So if we look at this, if we kind of said, look, I'm only going to take it down to where we had the most recent support level, it's going to be right around 530. Now, 530, if we're at 470, we go to 530, that's still over 10%, okay? So let's kind of use that as a starting point. It's not saying that it's going to go up there or it couldn't go any higher, but what we're going to do is we're going to put a target right at, let's say, 528. Why did you do that? You said 530, now you just said 528. Well, if everyone and their mother and father are drawing the lines at 530, we're trying to get out a little bit ahead of where other investors might set their targets. Okay, does that make sense? Now, the comment actually just real quick came in regarding some classes, just real quick, like different types of classes. So let me just kind of make mention of this just real quick before we do that trade, okay? So first off, if you're new here and you said, James, is this like the only class that you actually have? Or are there other types of classes based on skill level? The answer is yes. So this is good news, okay? Now, by the way, up front, how much does it cost? Zero, okay? Zero. It's not really like it costs you in terms of money. You're just investing your time. That's really what it is. Now, I want to make sure as Schwab clients, what do you have available to you? These are things that are available for free. Now, first off, if you go to this page right here, you're now going to notice is this page right here, when you go to the link that I sent to you, by the way, if you went to just youtube.com by itself and you just typed in Trader Talks Schwab Coaching Webcasts, okay? And you just typed it right in that search box, it should take you to this page. When you get to this page, right in the middle of the page, it will say subscribe. Subscribe doesn't mean that you cost something. In this case, it's free. Our page here has different videos, okay, that are really based upon different types of classes that we teach. You'll see that there's also a playlist, different types of playlists that we actually have based on classes, okay? So if you click on any of these example given, like Swing Trading by Connie, okay? If you click on that, it's going to show her class and it's going to list the classes out. We have Rachel with us, Trading Price Patterns. Well, if you click on Rachel, you're going to see that View Playlist, and pull it up, and you're now going to see Rachel's class, and you're going to see the different classes that she's done over time. So it's kind of nice. You pick a class that you like, put it, bookmark it. All we're doing is just go to that little star right there and just say, hey, bookmark that, okay? So that way, instead of watching TV at night where there's usually nothing on, I'm going to go ahead and just watch the playlist of a class that I want to actually take. The topic is trading price patterns, and really each video is a class that's been recorded, okay? So now the other thing is I want to make sure that you know about is this page, okay? If you went to schwab.com/coaching, okay, and you went down to, let's say, this right here, and let me know if you see this, live webcasts and virtual workshops, okay? If I went to that right there, clicked on it, you're now going to see, now make sure you're paying attention, and we'll show this again throughout the day. If I went to schwab.com/coaching, live webcast and virtual workshop, and I'm going to send this link out to you, okay? And now this is very important, okay? Now what's important about it? So someone will ask about, can you take a class based upon your skill level? Sure. So on this page, what you're now going to see is it'll say skill level. Now, if you said, James, I am a beginner, what it does is it takes any of our classes that we rank by skill level. And so if we said, hey, I'm a beginner, I want to see what classes that I can take are getting started, beginning, investing for beginners. These are our classes. What day are they on? It's on Tuesday and Wednesday. If you click on that, it will take you right to those classes, okay? Now, if you said, James, I'm not a beginner, I'm intermediate, okay? And obviously, it opens up more classes. And if you said, hey, James, I'm advanced, I mean, here you go. And you're now going to see that if we talk about advanced, it's going to show you those as well. Now, if you said, I just want to kind of see all of them, go back to skill level, and it's going to show the calendar. So if you looked at today and said, well, what is the docket today? Well, you're now going to see that we are on trading with technical indicators. We're right there, okay? So this is really nice that it's right there. Now, you don't have to be on a computer. You can be on your phone. You can be on an iPad, okay? You can, some of you actually download it. There's ways that you might consider that, where you can actually watch it maybe on a plane or whatever, or you just have Wi-Fi up there in the sky. It's right at your fingertips. My gosh, I would have killed this stuff. I didn't have any of this stuff when I got started, okay? Now, just real quick, let's go back to that, but hopefully that answers that question. So we got to stop, we got to target. Let's do our first trade example. If we now go confirm and send, this now just kind of is restating, is this what you want to do, okay? Buying shares of Tesla, we got a target. We're saying if we have the shares of Tesla, sell 15 of those shares if we go to 528, okay? Now, if it doesn't go to 528 and then it drops down to 432 and change, sell it. And we talked about how that stop works. We're now going to go ahead and send the order. And there it is. Now, in the paper money account, we do have some shares of that already. We had 11 shares, but now we have 26 shares. Can I see when I bought those and in what quantities? Sure you can. Click on the profit or loss on the position. Let me show that again. P&L open, profit loss open. Click on it. It shows you the date and time you did the trade, how many shares, what was the price. If you bought those shares more than once, it gives you that average price. Yeah, now Wiley did walk to school in the storm, uphill both ways. Yeah, and look, Wiley's still here. Okay, good. Yeah, a lot of us had it tough growing up, and I am definitely in that. I mentioned last week when I joked about getting Bugle Boy clothes as well on Friday. We had a little fun with that. Now, just real quick, let's go back to the second example that you made mention of. One of the other stocks that was discussed in the chat was NVIDIA. Okay, now if you look at NVIDIA. Now, by the way, I don't want to give anyone the idea that, oh, this is really just kind of meant to be shorter term type of trading. Well, it could be all of the above, okay? Now, remember, the purpose of the shading here is if there's like a green shading. So if we say shorter term type of trading, we're saying 2 to 3 days to 2 to 3 weeks. If we say intermediate, we're really saying 2 to 3 weeks to 2 to 3 months. Now, the shading a lot of times can be perhaps just that. Maybe it's kind of more 2 to 3 weeks to 2 to 3 months. Now, the duration of the shading, whether it's green or red, we don't know ahead of time. Boy, it would be nice. And what you're now going to notice is kind of there was some red shading. Green shading represents there was more buyers and sellers that knocked the price higher. Red shading means that there was more sellers than buyers pushing the price lower. Boo. Maybe boo if you were in, but good if you were trying to get in. Okay? Now, lately, what we've been seeing right here in the last couple of weeks is we've been seeing that green shading again. The $1 million question is, how do we know it's going to go up? You don't know it's going to go up. That's why you position size and you set a stop. Okay? No one knows ahead of time. Now, in this case, what we're going to do is let's go back, not to the weekly chart, but let's go back to, let's say, the 1 year daily. So every candle on this chart represents 1 day, and the duration of time on the bottom is just 1 year. That's what it means, 1 year daily. Now, if you zoom in on this to the right-hand side, we see a little run up in the price and a little pullback. Now, calling all technicians here. Is this an example of a flag? Does the pullback have to be more than 3 days? Did anyone say that? No. Okay. Now, so what you're now going to notice is we can see that we have a trend, which we kind of use as the 20-period moving average as a proxy for that. We got a trend. Price is above that. The 10-period moving average, we use a gauge for momentum. We got that. The 10-period moving average is above the 20. So there is a bullish trend on that right now. I know we're asking ourselves the question, could it go up higher? Now, if you're like most people, you say, James, I wish I would have gotten in right here, okay? Or right here, or right here, or right here. Now, again, you could go back to the scripts that we actually have right on my X page. You could see where the timing is, but we're just going to look at this as far as a new setup after a shorter term pullback. Now, the reason why there's a green dot on this is it's showing a bounce setup. When we say a bounce setup, we're saying of these red candle days, 1, 2, 3, which one was the lowest? And the answer is, survey says, it's right there. If the stock goes up and it gets above that day 2 high, okay, that's why there's a green dot right there. It's signifying a bounce. So people would say to me, like, well, I can't see the bounce. I don't have your experience. And I say, well, how about I just put a green dot on the chart for you? And they're like, yeah, that'd be nice. So that dot on the chart is showing us, are we making a close above the high of the low day? When we say the low day, we're saying which of those three candles is the lowest? It's the second one. Now, if the price is trading above or closing above that high, that's why there's a dot on the chart. Now, let's kind of show this as an example, okay? Now, there are some investors that say, James, I trade stock, but some people, they like to maybe do options. Some people maybe want to kind of maybe practice selling a put, known as a cash secured put. Now, here's the deal. You can know all about stocks, you can know all about technicals, you can know all about fundamentals, but at the end of the day, what type of strategy are you going to use? Let's say the investor said, James, my strategy is I like to do cash secured puts. I like to sell a put and collect a premium. And I like to maybe try to buy the stock at a potential discount from where it is now. Now, let's say the investor said, James, I'm going to go into the trade tab. Now, we know up top we could do a stock trade. Fine, we did that. But I'm going to go down here in this case. I'm going to type in NVDA. And I'm now going to go to, now we know with options, you can pick an expiration. How far do you want to go out? Well, remember in our example, we like to go out to the monthly options that are in that white color. We like to look for more than 20 days. We only have 18 days. So we're not going to go to those ones right there. We're now going to go down to the 19th of December, where there's 46 days remaining. Now, what you're now going to notice is instead of seeing so many strikes in the middle of the page, let's say we just did 10. So now this is a little bit more manageable. We don't need to scroll. Where's the current stock price? It's at 210. Now, you have calls on the left, puts on the right. Now, if we're talking about selling a put, we're going to go to the right-hand side, and whatever strike that we click on, so strikes in the middle of the page, 210, 205, 200, and so on. If we decide to click right on that 200, we're saying, I believe the stock could stay above 200. And if I had to buy the shares of the stock at that price, I wouldn't mind. Now, the investor says, if I'm going to take that risk, I want to be paid for that risk. That's what the premium is, okay? You're also agreeing to lock up some capital to see if the stock can stay above the 200. Now, if we just click on this 835, okay, click on it. Now, many of you that are on here on a weekly basis, this is not a one-off. We meet every Monday, okay? If I just click on it, so how did you do that again? Well, if you want to sell the put, click on the bid. That's what we did. Click. And it brought up that we're selling one contract of the NVDA, the 19th of December for this year, 2025. The strike is 200. And we're saying, hey, look, I think the stock could stay above 200. Now, 200 is where the investor is saying that they're okay with buying those shares from now until expiration. Okay? Now, remember, there's risk. Okay? What's the risk? Well, the stock could go down and the investor could be the buyer of the shares. For that risk, they're saying, you're going to have to give me some money, honey. Okay? If you want me to be the buyer of the shares at 200 from now until expiration, pay me some money. Now, that $840 is put into the paper money account. It has not made it yet. That's the upfront premium. Now, if we say at expiration, where does the stock need to be above at break even? 191.60. That's just the strike price that's sold less the premium. Now, max profit, it's the premium you receive. Max loss, this is showing if the stock went to where? Went to zero, okay? Now, if you buy shares of stock and said, what's the max loss? The shares could go to zero, okay? Now, one person in LA told me, well, I never do this type of strategy because the max loss is so much bigger than the max profit. But you got to understand the max loss is showing that because they're saying if the stock went to zero, okay? Now, that's the truth. It could go to zero, okay? But it's showing that. Now, what's the commission? The commission, 65 cents per contract. That's the net, the credit less the commission. Now, what we're going to go ahead and do in this case is we're going to sell the put there, okay? Now, if we take a look at this, now the Wayne's question is what do the letters mean? So the letters are telling us which exchange are those quotes coming from. So if we're talking about, let's say, the bid, it's taking the highest bid of all the exchanges. And it's taking the lowest ask of all the exchanges. So it's pulling that information in, and that's what the letters by the numbers mean. There you go. Okay. Now, let's kind of go back to this real quick, and thanks for that, Rachel. Now, the one thing I also want to kind of make mention of, a couple other stocks that are kind of standing out a little bit. So there was a comment regarding Cisco, okay? Now, what you're now going to notice is Cisco is in the paper money account. Yes, it's been pushing to the upside. It did hit a brand new high here today, okay? Now, what I like to do is, especially on Monday, I like to kind of say, what are some stocks that maybe an investor might watch throughout the week? Some financial stocks are kind of sitting in a flag-like state where they've run up in the price, they've consolidated, they're building a higher plateau of support. They might be trying to bounce this week. Number one is American Express, AXP. The second one that we're going to keep an eye on is GS, Goldman Sachs. The third one in the financials, same thing, JPM, JP Morgan Chase. And the fourth one actually here that we're going to keep an eye on is Wells Fargo, WFC. Now, if we were to say what type of price pattern are we seeing on this chart, well, you're really getting, in this case, higher lows. Now, we could see the higher lows because the dots are actually getting higher. And if those dots are actually getting higher, it's just telling me, well, James, okay, higher lows. And this, we're kind of getting into what they call the apex of the triangle. When the horizontal resistance and the diagonal line overlap each other, technicians are forecasting and maybe trying to trade the breakout up or down. In this case, since the stock was going up before the kind of the consolidation, some technicians might be forecasting the up move, okay? Now, just real quick, if we go back to something, so the other couple stocks, I just want to make mention of two, okay? MU is, for example, another stock along with the NVIDIA that's got a push that continues to trend. And the last one I'll make mention here, second to last, AMAT. And literally the last one we're going to keep our eyes on going forward this week is also Google, okay? These are some stocks that have actually had some quite strong trends. Now, I want to remind us just real quick. So first off, if I went back to this page, okay, let me just start back to where we kind of were. You said, well, James, how do I actually find us on YouTube? You went to youtube.com, typed in Trader Talk Schwab Coaching Webcast, or just clicked on the link that I sent. It's going to take you to this page. Just click on subscribe. It's free. My gosh, just click on it, okay? Now, if you said, James, could I go back and from this class, could I go back and just follow the playlist? Could I go back and see different classes that you've done over time? Yeah, sure, right there. And they're there for your taking. Now, what happens is, this is like learning a new language. As you hear it more and more, it just kind of becomes second nature. And that's really what happens, okay? Now, if you said, James, also, where do I actually see the calendar for other sessions that are done throughout the week, so I can join them based upon my skill level? And you're going to see that this link I send in the chat, make sure you bookmark that. You can base it upon your skill level. You can also say, look, I really like to follow different teachers that I feel like I learn a lot from. You could select it by the teacher as well. Now, the last thing I want to make mention of is, do not forget also, if you said, James, I am someone who likes to learn, I do better when I go, like I learn in person. We do also have in-person events all throughout the country. And do not forget, those are free as well as Schwab clients. The next one coming up, we're going to be in Anaheim, November 22nd. You do not have to live there. You could be just there for visiting family, on a business trip or whatever, and you could join us. We'll also be in Houston as well, Miami, and you could scroll down through that list. So if this is your first time here, you should be like, wow, I had no clue that like these these things were available. Welcome to the Schwab family. Okay, they're right there at your fingertips. Keep coming. You'll learn more and more. Now, coming up next, we have Cameron May. They will be teaching the next webcast. Feel free to join us there. He does a great job. Thank you, Rachel, for answering those questions in chat. And also remember that with what we discuss here today is done for example, illustrative purposes only. And also remember to go out and practice some of these trade setups that we talked about in the paper money account to learn. So with that said, this has been the class on trading with technical indicators, talking about sentiment gauges, where are we seeing those trends, and that relative strength. So with that said, have a great day, take care, and stay tuned for Cameron May coming up next. Bye-bye.